afternoon. Welcome to the macroeconomic data that's going to be flashing on your screen. It's a brilliant GDP growth number. The FY24 GDP growth estimate has been revised higher to 7.6%. Well, that's a very good thing, but I must warn you that's also because the base has revised lower. We warned you all that previous year revisions are also in store. So FY23 has gone down from 7.2% growth to 7.0% growth. And that to some extent has helped the current year's growth get revised higher from 7.3 to 7.6%. But what's absolutely brilliant is the October-December or the Q3 data for FY24 coming in at 8.4%, an absolute outlier of a number. Our poll gave us 6.7%. We are talking 8.4. Clearly, quarter after quarter, growth is beating all economist and analyst expectations. Again, here, there is a help coming in from the revised lower year-ago number. Year ago, we had a 4.5% earlier. Now it is a 4.3% growth. So the lower base has genuinely helped the numbers look better, but it doesn't explain the 1.2 percentage point higher number that we are getting over here. We were prepared for 6.7, but what we are getting is an 8.4% growth. I can understand 7%, I can understand 7.1, but 8.4 is quite clearly an extraordinary performance. So let's come to the nominal GDP numbers. That's come in at 10.1%, which will be a very big consolation because the full year number is only 8.9, if you remember from the first estimates on Jan 5th. So the nominal GDP growth, which is really real GDP plus inflation, very broadly speaking, that's coming in at 10.1 for October-December. But let me give you the nitty-gritties. Farm sector has disappointed. It's minus 0.8% against our poll of 1.3%. So that's a bit of a setback compared to the 5.2 year ago, upwardly revised 5.2. Mining sector is up 7.5%. Manufacturing is absolutely rocking. 11.6%. I think our average was a little south of 10% in our poll. 11.6 is rocking. Construction sector, always expected to do well, has done as well. It's 9.5%. Remember, a lot of government capex is going into construction, and that's a 9.5% growth. Let's wait for more numbers to come in. Okay, the July-September number, which is the second quarter number, has also been revised higher to 8.1. The earlier number we had was 7.6. So this has to change, producers. It's no longer 7.6 Q2 number. Q2 number has now become 8.1. So please make the revisions. I know we are going by the previous numbers, but that bar chart will have to change. I hope producers are listening. The Q2 number has become 8.1. It's no longer 7.6. And the April-December number, the April-December 9-month GDP number is 8.2. I'm looking for the Q1. Okay, Q1 is also revised higher to 8.2. The earlier number was 7.8. So we have revisions all the way. Let me put it back in context. The full year GDP number for the current year revised higher to 7.6 from 7.3. Full year number for last year revised lower from 7.2 to 7%. And for the current year, Q1, Q2 have been revised higher. Q1 has been revised higher from 7.8 to 8.2. And Q2 has been revised higher from 7.6 to 8.1. And Q3 is just blows you away number. It's 8.4%. So the first 9 months itself is giving you an average of 8.2% growth. So clearly Q4 has to be pretty weak for the full year average to come in at 7.6% because the first 9 months is 8.2. That's a mind-blowing number. Okay, we're getting GVA numbers as well. The FY24 revised GVA number is 6.9%. Okay, it was 6.9 earlier as well. So it's actually GDP only that has been revised higher. What else do we have? FY22 has been revised higher. Okay, that's substantially revised higher from 9.1 to 9.7. That perhaps, that higher base, perhaps explains why the FY23 number has been revised lower. So it's like a huge number of revisions. Let me tell you again, FY22 revised to 9.7 from the earlier 9.1. So that's revisions all the way. We have, I think, a substantial amount of data by now in terms of the Q3 number itself. Construction, like I told you, 9.5. Manufacturing, 11.6, over a minus 4.8 year ago. Mining sector, 7.5. Farm sector, minus 0.8%. So that's the one. I'm trying to get the numbers going for you. Give me a minute to get cracking on the full numbers. Okay, just a minute. Okay, so it is a 7.6% full year growth number. We should be getting it. It's just not getting updated over here. There it is. Okay, so the Q3 number, 22-23. Just a minute. Second advanced estimates. Okay, this is for the full year. The full year numbers have been revised higher, like I told you, coming in at 8.2. But let me see if I can get, this is the 9 month. Okay, we still haven't got the Q3 number. Okay. Sorry, I think I have to go with what I get from the agencies, and I'll be able to read out the individual numbers to you in just a bit. This is the second advance estimate of GVA for the full year. That has come in agriculture at 0.7%. This is for full year, okay? I'm reading out the full year second advance estimates. Full year, it's 0.7%. Agriculture, mining, 8.1%. Manufacturing, 8.5%. Electricity, gas and other utilities at 7.5%. Construction is very good for the full year, 10.7%. Trade, hotels, transport and communication coming in at 6.5%. Finance, real estate and professional services at 8.2%. Public administration, defense and other services coming in at 7.7%. The full year, FY24, comes in at 6.9%. Let's look at, okay, more numbers coming in. GDP coming in at 8.4% for the third quarter. That's the numbers so far. I'll give you more details at constant prices in just a bit. We have not got the breakup yet. But let me invite my guests. I have Kaushik Das, the chief economist at Deutsche Bank. We also have the former chief statistician and former chairman of the Statistics Commission, Dr. Pranab Sen. Sakshi Gupta, the senior economist at HDFC Bank, also joining us. Dr. Sen, first thoughts, this is a mind-blowing number, 7.6%, and for Q3 itself, it's an 8.4% number.
Oh, it is completely unexpected. As you rightly said, Lata, none of us would have expected this kind of number for Q3. But having said that, I mean, what is really striking is the size of the revisions that have been made in the past. These revisions are substantial. And what is really a little worrying, and really these very high numbers we are seeing for the current year are a result of the downgrading of the previous. But the really strange part of it is that the downgrading has happened only to GDP, not to GVA.
Yes.
And that is surprising because one of the data points in any of the GDP estimates, which is very accurate and usually very much on time, is the difference between GDP and GVA.
Yeah.
Because most of that is essentially government data. It's tax data.
Okay.
Tax and subsidy data.
Absolutely.
So unless subsidies went up for reasons unknown, we don't know what's going on here.
Yeah, I agree with you that it's extremely perplexing that GVA has not been revised, but GDP has been revised. One would have assumed, that's the predictable part.
I can understand GVA being revised.
Yes.
Because those are more uncertain data.
Okay.
But GDP being revised without the GVA is very, very unexpected.
Okay. There is another perhaps not very good number that's coming in. Personal final consumption expenditure for the third quarter is only 3.5% higher, coming in at 25.6 lakh crore. That is a bit of a surprise. 25.6 lakh crore compared to 24.7 lakh crore year ago. I will give you the government final consumption in just a minute, but this is the first disappointing number that we are getting for the Q3. Otherwise, we were all blown away by the overall GDP number. Kaushik Das, first thoughts on what I have told you?
So, Lata, we were projecting 7%. We are higher than the, consensus, but, nobody could have thought of a 8% plus handle.
Yeah.
But we knew that the base will kind of change, and depending on that, how things will look, that was always a question. But what are the overall trends? I mean, last, 3-4 times that I've been on your show, every time we discuss GDP, it has surprised to the upside.
Yeah.
We can talk about the quantum, but this time also it's surprised to the upside.
Yeah.
The second point that you made, every time that we discussed, private consumption has been lower, and Dr. Pranav Sen himself had made this remark last time or the time before that you're getting services sector very strong data, but it is not somehow matching with the private consumption, also remaining strong. That is looking on the lower side. So why is this different? So, and on the other side, I'm sure you'll discuss the investment number that would look pretty strong.
Oh,
to
yes.
Give you that 8
I can give you that number. 10.6% is the gross fixed capital formation number. GCFC has come in at 14.18 lakh crore, and that 14.18 lakh crore, that's a very good number, 10.6% higher than year ago. You know what? Government final consumption is minus 3.5%. I mean, this is mind-boggling. 3.4 lakh crore compared to 3.5 lakh crore in the previous year. So I'm a little shocked by this kind of number.
So Lata, if I may,
please,
just do a quick analysis. If your private consumption is in the 3% handle, if your investment is around 10-11%, which is what our forecast was, and government consumption is minus. So what would have happened is this export minus import. That is the delta that has given you this 8.4%. We have to look into the details. We have to look into discrepancy, how it will be adjusted or has been adjusted. All these technicalities are there, but the broad trend is investment is remaining strong all through the last few quarters. Private consumption is weak. Government consumption last quarter was strong. This quarter is weak. But it is the export minus import figure. When you see that probably has led to the delta of that 8.4 compared to the 7% that I had.
Yeah, you're absolutely right, because what we see is a minor increase in imports, and exports actually also growing as much. So I think the net exports figure has been positive. As well, there is hardly any discrepancy. Discrepancy is just about 6,935 crores. So this is not a discrepancy issue. This is quite clearly net exports contributing perhaps a little more than most of us have taken account of. But I think the disappointment will be that private consumption is lower. Sakshi, your first thoughts?
Yeah, so Lata, I think a host of data revisions, both for this year and as well as previous years, that kind of murkies the, trends and analyzing them. But I think the bottom line here is that, yes, of course, growth momentum, even if we don't look at, the base effects in the YOY number, I think the 8.4 numbers suggest that the third quarter, we had a, high momentum in terms of a quarter-on-quarter basis. Is much higher than what we or I think the market was expecting. From the supply side, I think it is interesting to see. I mean, I think the agriculture, slowdown is slightly surprising because it's a negative number, but we kind of knew that there were issues there because of, the kharif production, etc. I think the real surprising bit actually is on the manufacturing side, because the 11.6 number, growth number is, I think, on the higher side, and it doesn't really add up to the high frequency indicators that, we were tracking for Q3. I mean, look at IIP growth, diesel consumption, tractor sales. A lot of these indicators were actually hinting at some slowdown on the manufacturing side, right? So, but this number clearly suggests that there seems to be a lot of momentum in the manufacturing sector. On the demand side, I think broadly from the numbers that you mentioned, I think the story continues where I think private consumption and consumer spending has been lagging behind. I think the major support continues to be, this whole investment story. Perhaps we, from anecdotal evidence and some of the data that we track, we are finding evidence of some interest on the private side, private capex side as well, but it's still concentrated to a few sectors. It's not very broad based. And I think the export bit is very interesting because some of the monthly data that we've been recently seeing shows that there is some pickup on the export side that is happening, right? And I think that this part, both on the goods as well as services side, could be a support as we move forward in the coming quarters. I think we are looking at higher volume growth in terms of goods export. I think services exports have been doing very, very well and surprising us every single month. So yeah, I mean, I think overall a very positive Q3 number.
Okay. Q3 number, unfortunately, from the demand side or the output side is not yet available. We have the 9-month data, but there is some problem with the PIB press release that there is a blank when it comes to the constant prices, agriculture, mining breakup. We do have the second advance estimates breakup. We do have the 9-month breakup, but we are not getting the breakup for the third quarter itself for the GVA. Let's check out. I mean, I do have the current prices. I'm not able to get to the constant prices. We are getting constant prices from the demand side for, private final consumption. That's why I could tell you that consumption has grown by only 3.5%. Government consumption has fallen by 3%. And gross fixed capital formation has risen by about 14%. But, we also have the core sector data, which is a 15-month low of 3.6%. There seemed to be some creeping weakness. And if you take the 9-month data of 8.2% GDP growth and put it along with the full year data of 7.6, this is looking like a fairly decent weakness in the fourth quarter or the current quarter, would you say, Dr. Sen?
Yes, indeed. I mean, it's quite substantial. But, I'm still having trouble figuring out the expenditure side breakup and how it's adding up with such weak consumption data.
Yes.
Because consumption is the heavyweight in the room, right? I mean,
absolutely.
Nearly 60% of the weight. The net exports can't correct for it unless the gap is massive. So one would have to look at this very, very carefully as to what is going on.
Yep.
Where is this?
I will have to allow you all to go finish the show and go back and see the table for yourself. Changes in stocks, valuables, all those perhaps have also contributed their share to this data. But what we are trying to wrap our heads around is that if consumption has risen by just 3.5%, consumption is, it's massive. It's half the contributor to the GDP. The government final consumption, the capital goods, the net exports, all of them are much smaller contributors. Consumption is like, 55%. Why? We have the number over here. It is 58% of the entire basket. And that one is up just 3.5%. Yet you have a GDP number which is up 8.4%. So where is this coming from? Yes, 10.2 has come from, or 10.6 has come from capital goods formation. But capital goods per se is just about 1/3 of the entire basket. So, that's the question Dr. Sen is raising. So, Kaushik, will you revise your numbers? I mean, the 7.6%, is it a number we will all have to go with? Or do you think that fourth quarter and further revisions can change your mind? Are you going to redraw your GDP numbers?
Lata, I mean, mathematically, if you get a number for April, September this high, then whatever happens in January, March, still the number would be on the higher side. Yeah. Nobody could have expected this kind of a number. When CSO came with 7.3, remember that was higher than RBI's 7%. So that itself looked on the higher side. Now they are saying 7.6. So it's clear that if these numbers, these numbers will stay with us for some time. Yeah. So obviously the revisions will be upward.
Okay.
More interesting would be, apart from looking at all the components and, one trend is what you're saying basically is that this financial year growth has actually accelerated compared to the previous year, despite all the rate hikes and whatever has happened, liquidity tightening, which is a little
good. You
strange.
spoke about rate hikes, Kaushik. That's the question. With the growth of 8.4% behind you, which central bank will have the courage to loosen in any form? What are you expecting in April?
Lata, monetary policy is forward-looking. So if this year has gone up, this makes the base more challenging for the next year. So next year's forecast will be what is more relevant, FY25 and ahead.
Okay.
And April, RBI is not expected to do anything, but July and August or June or August, when they come, they're not going to look at just the current data. They're going to look or think about June or August of 2025. If they don't do anything, will this kind of growth or whatever they have in their mind will get sustained or not, particularly when you are having fiscal consolidation at a higher pace. So the argument for rate cuts can still continue, but it may get delayed, and it's all also linked with the Fed cycle when the Fed is expected to cut. All those things are there. But to your point, if you're getting such strong growth, the only argument for cutting rates would be how much high real interest rates you want to maintain compared to the inflation that you're getting, and your policy rate is at 650, effective rate is at 675. Those discussions will come into being. But today, let's enjoy.
Yes.
And think that India has gone back to 8% plus. And, that's a very positive kind of signal for the economy.
Absolutely. For the 9 month, we have an 8.4% growth. And for the full year, we are almost through with, 11 months. For the full year, it's going to be 7.6%. That's, still higher than what we were anticipating. I think the fly in the ointment is consumption. The fly in the ointment is also core sector. It's, for the month of January coming in at 3.6, it is a 15-month low. So all this is just not tying up. However, we got tax collection data, which was brilliant. Income tax up 27.3% for the first 10 months. So, clearly that's showing growth. Corporate taxes is up 20% April-Jan. So clearly there is a lot of joy in these numbers. And yet consumption is low, core sector is low. It's a little difficult to tie all this in. Sakshi, last thoughts. Do you think that the Reserve Bank will, keep its hands off from any kinds of loosening?
If you look at this data, then I would say yes. But I think this has been a theme globally and in India. All growth numbers seem to be surprising on the upside. That's true for the US, that's true for India. I think central banks find themselves in a scenario where growth momentum continues to hold up despite the monetary tightening. My view on the RBI would be that, there is an increasing possibility that the rate cuts, both in terms of quantum as well as the timing, are increasingly getting pushed forward. So perhaps not Q3, but then Q4. I think this is a theme that we are seeing even with the US Fed, where increasingly, market has been pushing back on, when rate cuts are going to happen.
Fair enough.
So we have to wait and watch on that.
Okay. Well, actually, you raise a very important point, which I want Dr. Sen to give his comments on. Dr. Sen, even in the US, for the past several quarters, we are seeing GDP numbers coming in better than expected. It's 4.4% on a massive economy like that for the third quarter and 3.2% for the fourth quarter in the US as well for calendar 2023. Higher than expected. The point is the expectations were 1.9 and we got a number like 3.2. So, what do you make of this trend across large economies where growth is surprising on the upside?
Well, it's not really a trend across all large economies.
Two large economies.
Yeah, two large economies. The rest of the other two large economies aren't doing that well.
Yes.
Not that they're doing badly, but they're not doing. They're doing pretty much up to expectations.
Yes.
So the question really is what's driving these figures in India and in the US? And I think the factors are very different. What we do know, for instance, in the US, the labor market is extremely tight.
Would you say, sir, fiscal largesse, even after the cut in deficit, we are still an 8% fiscal deficit country?
They are. So they do have a large fiscal, and they have a lot of monetary expansion yet to deal with. We have moved much faster.
Yes.
On both counts.
Yes.
And so I think the drivers are very different in the two countries because our labor markets are not tight by any means.
Yeah, that's a fair point, sir. Thank you very much. And I'll leave you all to pore over the numbers in greater detail, and we'll perhaps understand them more when we look at all the previous revisions. Thank you very much, Dr. Sen, Kaushik and Sakshi, for joining in and giving us your first thoughts about the GDP numbers. A very quick wrap, mind-blowing numbers on the growth front. We have an 8.4% growth for the first 9 months, and for the third quarter itself, we have an 8.4% growth. Okay, the first 9 months is an 8.2% growth, but for the full year, the NSO has increased the estimate to 7.6 from the earlier 7.3. A part of it is explained by the revision lower of last year's number from 7.2 to 7, but that doesn't explain everything. This is genuinely a very good growth story. However, we must point out to two things which are not gelling with this extraordinary growth story. One is that consumption is very weak. For the 9 months, consumption has grown by only 3.5%, and even for the third quarter, the bulk of the heavy lifting seems to be done by capital expansion. So you would worry about that. As well, core sector data that we got for January has come in at 3.6, a 15-month low. And the ones that have not done well are steel and cement, which is very much a private sector domain. That's not done too well. It's only electricity and coal that has done very well. So there are things that are not gelling. Nevertheless, for the moment, we have to celebrate this extraordinary growth pace at which the Indian economy is growing. We wrap up on this edition of the State of the Economy. Thank you very much for joining. More news and updates lined up for you. And next show start. Oh, sorry. All right. Then use the same thing. Well, the GDP numbers for the current year have been revised higher, and the numbers are simply mind-blowing. Okay, can I record again? Sorry. Just start. 1, 2, 3. The GDP numbers for the third quarter and for the full year have been announced by the National Statistical Organization, and they are simply mind-blowing. The third quarter growth has come in at 8.4% against the CNBC TV 18 poll of 6.7%. But what's more important, the full year number has been revised higher from 7.3 to 7.6%. The CNBC TV 18 poll stood at 7.1. So this is a good half a percentage point higher than where the market is standing at this point in time. A part of the revision is because the earlier year has been revised lower. That is, FY23 has come in at 7% against the earlier expectation of 7.2. But even that is not a poor growth story, because the previous year, that is FY22, has been revised higher from 9.1 to 9.7. So that explains, that big base explains why FY23 had to be revised a little lower. All told, it's an extremely positive growth story. For the third quarter and for the 9 months itself, it's only agriculture which is a bit worrying, coming in at minus 0.8%. But otherwise, when it construction, it's almost a double-digit growth of 9.5% for third quarter. The manufacturing sector has grown at 11.6%. It's a very good growth number. So all told, from the output side, the numbers look very good, except for agriculture. If we looked at it from the expenditure side, then private final consumption expenditure, which we normally see consumption as the engine of growth, it accounts for 58% of the GDP. That's grown at only 3.5%. Government consumption has actually fallen by about 3%, but capital expansion, capital goods or investment has grown by 10.6%. So that's a fantastic number. It is an investment-led growth, as we can see. So all told, this is a mind-blowing growth story. With that, let me hand it over to the experts. We have with us Dr. Pranab Sen, the former chief statistician and chairman of the Statistics Commission. We have Kaushik Das, the chief economist from Deutsche Bank India, and Sakshi Gupta, the senior economist from HDFC Bank. Here's a chunk of their comments, their first thoughts on the GDP numbers. Okay.
Thank you, ma'am. Ma'am, you want to do the link also now only?
Yeah, link is the same thing. You want me to do it again?